All right, Financially Fluent Fridays. We've got Sarah Haliburton, Beer Home Team. What's going on, Sarah?
What's up, Zach? Just trying to stay dry in the rain.
Yeah, no, I feel you. We had walking the kid to school today. I got soaked. It was funny. At the rain jacket, I was shaking it off. But anyhow, yeah, it's beautiful. We need it. But golly, give me a second here. I'm going to tag you on the post so that you are officially here.
Oh, I'm here.
All right. Hold on one second. There you are. All right, cool. So, yeah, appreciate you jumping on. Obviously, I know you had a meeting this morning, so we ran a little bit later than we normally do, but got to be productive, got to make Fridays count, so I love it.
Right.
Lots to talk about today, so I wanted to just kind of jump right in. I think one of the first things I had on my mind today was the concept of a step-up property, and I think the reason I wanted to talk about that is obviously we know inventory is tight in San Diego, and, the whole let's get into my dream home and that concept, you might not always, your first home is not necessarily going to be the dream home, especially in this kind of market, but you don't want to cost yourself opportunities. So that was where I wanted to start off the conversation. And I know you have a lot of experience on that side of things too. So what's your insight when it comes to a step up property or that approach?
The thing I've seen the most is like people have this idea that when they buy their first home, they want it to be their dream home, right? They want it to be the perfect house with everything, the wide open kitchen or the walk-in closets. And sometimes it's better to get into the market, get something that works for 2 to 3 years, gain your equity, get 100, 150K in equity so that you can step up into your next property that has all of those things. Now, we don't know what pricing and rates are going to do. There's no crystal ball, but what we do know is that real estate is a good long-term investment and it's always, if you look historically, it's always produced a return on investment over a course of 10 years, 5 years. So depending on when you buy and depending on what you look at now, Zach, I know that we've talked about this for weeks and weeks. Even if you don't sell your first property but you use it as a rental, I mean, now you're cash flowing because we know that in 3 years from now rents are going to be higher than they are today. So I think giving yourself the opportunity to, number one, not pay someone else's mortgage, number two, gain equity, and number three, leverage the bank's money instead of your own is going to set you up better, whether it's the perfect home or not, right? Something in San Diego, I don't think we're going to see a huge fallout. There's just too many people that want to live here.
That's the truth. I mean, I can tell you right now, I'm talking to so many transplants and so many people that are coming, from all across the country because, I mean, bottom line, even though it's raining outside right now, the weather here and you don't get that elsewhere. And so you're 100% correct. And something you said, we've said a couple different times, I love this, what you said, is that, the interest on rent is 100% and bottom line. And the other thing is that, we've seen, I think in the last couple of years, it's on average about 20% equity gain is on average in San Diego, which is not typical. I mean, bottom line, that's not typical. But for the foreseeable future, we're going to continue to see those gains because, they're not building. We talk about this over and over and over again. They're just not building new homes. Over time, what's going to happen is that you're going to see people age out of the market, people that are, unfortunately, people pass away and or they move to their retirement. I have a lot of people that I know that are moving out to like Arizona or moving to, different areas where they don't tax the retirement income. Those are going to be opportunities for you. And, but you have to have some skin in the game. And if you have that equity built up, it gives you that leverage, whether you sell the current home, like you said, whether you get cash out of that home to use as a down payment and keep the home as an income producing property. It just don't cost. It's the old saying, don't cut off your nose to spite your face. Just because you can't get that perfect home necessarily, or that dream home, if you will, necessarily, get in and gain equity. I can tell you when we bought our house, it wasn't, I live in an area that when I first bought, I didn't want to live in this area. It was one of my, I don't want to live there. I don't want to live there. I told my wife that. It was funny. We looked, and then when we walked in the house, we walked out, and begrudgingly, I looked at her and said, that's the house, isn't it? I knew this was the house, and it's been great. I love being here. It's an amazing neighborhood. But that being said, we've more than doubled as far as equity is concerned. We have a ton of equity in this property with whatever we decide to do. We can utilize that. And so I'm so glad that we did pull the trigger and I didn't allow that to hold me back because it didn't check every single box. And with this one, I saw some interesting data too that I think is interesting is that younger folks are actually a little more interested and open to doing repairs or getting fixers, which in a competitive environment, you may find yourself doing that too, getting into something where you have to do some work. What's going on, Eli? Happy Friday, brother. So yeah, I think that's important. I think, and we've talked about that a few different times, but I think right now more than any, those condos, if you have the space that you need in a condo, there's nothing wrong with condos. Because you're going to gain equity and you will be able to eventually flip that. So that's really important.
I think that's kind of the mindset shift that I think that you and I are trying to focus on is, yes, you want your forever home. Yes, you want your dream home. And yes, that is the American dream of home ownership. But at the same time, real estate is a wealth building tool. If you ever, I don't know about you, Zach, but I meet with clients all the time that, like you said, are retiring. They're selling their home, probate sales. And so in these conversations with these families, I mean, you're talking about older people that own 9 properties and their net worth is ridiculously high. You would never know it because they don't show it. But the way that they got that was by leveraging other people's money into real estate. And so if we can shift our mind from finding the perfect home to starting our wealth building journey, I think that would be huge for a lot of people. Yeah, it might be uncomfortable a little bit for a year or two in this, smaller condo, but find it in an area that you like, something that's appreciating, that you can see, the progression over time. We talked about when I lived in Normal Heights 6 years ago, nobody wanted to live in Normal Heights. Then it had 16% equity growth because it was the new North Park. So having someone that you can kind of look at that with and getting into those areas is crucial.
Yep, absolutely. One of my best friends is an investor, a real estate investor, and he's worked in real estate for a very, very long time. And we were actually on the phone 2 days ago, and he said, old proverb, how do you gain wealth? How do you build true wealth? It's buy property and never sell it, which I think is an interesting strategy. I think, when we talk about what we want to do with this house and we grow our family and all that, like, I don't see myself ever wanted to sell it just because it's such an asset. But that's the whole point there. So absolutely. Well, let's shift gears a little bit now. We definitely know that we talk a lot about the market here, and prices and values are up, prices are up. And one of the things I wanted to touch on, just kind of on the mortgage side of things, is the jumbo loans. And I know that you have some experience working with jumbo sales and that, and there's a ton of options out there. People get kind of pigeonholed or afraid of jumbos. They get worried about them, but there's some advantages to them as well. One of the things you can talk about when you look at a jumbo, most of the time you're not going to have mortgage insurance, which is great. So you're not giving away that money to the bank, which we all hate that mortgage insurance. And just in San Diego, I think it's what is it, 879, 751 is a jumbo loan. Anything at that point or above. But there's a ton of options. And now there's even loan programs out there where you can get in for as low as 3.5% on a jumbo, which they're strict. I mean, there's not going to lie about that. They're tight, but I'm actually going to be pricing one out today for a dentist client of mine because she did not want to come in with 10%. But the nice thing is for 3.5% or 5% or 10%, if you're in that position to purchase that home, you can get in and you'll have no mortgage insurance, which is just plain awesome. And we're seeing a shift with some of the interest rates and some of the programs. The rates are actually darn good. Like, they're really competitive right now, which is something that in the past wasn't the case. They weren't as competitive to some of the other loans. So now I know you've worked with some jumbo buyers. Do you have any insights on that side of things at all?
Not specifically on the mortgage side, but I will say that there's a lot of people, it's funny, Zach, I had a conversation with somebody the other day. It was actually another agent. And he's like, it would be stupid not to go to market for anybody. And we're talking jumbo properties. We're talking about 2 to 4 units. We're talking about things that are income producing, Airbnbs, those types of things. And I said, well, so-and-so, some people just don't want to deal with the market. And so I think that there are a lot of people in that jumbo position that have equity, are looking to do 1031 exchanges, are looking to do that, but aren't looking to go live on market. And meanwhile, you have the buyers that don't even know that these jumbo programs exist, or the new non-QM programs that are out there. And I'm sure that you could touch on this. Maybe we'll do that next week, some non-QM stuff. And I'm sure you can explain that much better than me. But there are a lot of loan programs out there that are so creative. And sometimes, Zach, I've seen for my clients especially, they're thinking, oh, I want to put 15% or 20% down. Well, the difference of them putting 15% and 20% is not huge on their mortgage. But the cash in their pocket leverages them tenfold. Now they've got security if they ever need it a little bit, if a month of mortgage is tight, if they need to make repairs, if they want to do upgrades. So I think it's really important that they understand exactly what their options are, especially once you get into that jumbo space.
100%. And that's the thing. It's just like you said, there's so many options, and let's talk non-QM next week. But when you talk about that jumbo space, there are a ton of options, and cash is king, right? And one of the things that I talk about a lot with my clients is you want to make sure that when you get into your house, you're in a position that something happens, you can still make the payment. You can still live the life you want to live. You can still go do what you want to do, because you don't want to be in a house and just work to pay the mortgage just ever. That's not the way to, to live, period. And that's part of how we advise on either side. I know you do the same thing. We've talked about this more than once. And so that's such a great point, is keep the cash in your pocket. If you can keep the 5% more on a jumbo, that's a good chunk of change. And that'll help put you in a much stronger position. So 100% agreed. Now, you brought something up that I think is really important to talk about. And I've seen this actually with my clients. And so something we talked about before we came live here today was talking about being that backup offer. So I want you to touch on that, because I know this is something that is near and dear to your heart. So let's start it off there and talk a little bit about that.
So, there are certain price points in this market that I feel like are tighter than others, right? And it's some of it's the entry level, some of it's the mid level. But I have a client that we've been looking for a 1-bedroom condo forever, probably 3 months now. And we've written a ton of offers, and we just don't have the same oomph going into our offer because we don't have a ton of cash. We are conventional, that helps us, but we don't have a ton of cash. And now with the pricing going higher and higher, and people wanting these crazy appraisal gaps and no appraisals and these things and that things, what we're seeing borrowers agree to it up front. They're like, yes, Mr. Seller, I will give you all of that and more. Just accept my offer. And then 2 weeks later, the appraisal comes back. It's not at value. Well, Mr. Seller, I know that we agreed to it, but we're still going to cancel because it's not what we thought. So every single offer I'm writing a backup addendum, and I'm putting my client in that number one spot to where if that previous borrower does bail out, we're there. We're next in line. We will be opening escrow today for her on a backup offer, a house she absolutely loved. They accepted an offer $20K higher. The appraisal didn't come back. The borrower then had agreed to pay all of this extra cash. But when it came down to it, he walked away. So now she's taking an offer that we were $20K less than that. And, but we'll close. And so she's like, okay, let's do it. I know you'll close. I know that you've got the funds that you need. So let's do that. So I strongly encourage, if you're out getting beat up in the market, which is going to happen, it just is. There's one house for 50 buyers. Like, that's the reality. And some are going to have cash. And no matter how great your agent is or how great this is, I feel like some of these platforms that we're submitting offers to, Zach, now on like, Homelight and Redfin and all of these other people that Open Door, there's no emotion. So you're not negotiating with a seller. You're negotiating with a company. So they're looking straight at cash. So you're not going to win all of those. But put yourself in backup position. Put yourself in a smart move in case that other borrower cancels.
No, 100%. Now, I've had clients, I can tell you quite a few that have been backup offers that have gotten in there. And, it's something that I think you also tag on something from the loan side that I think is really, really important for me as an advisor, is making sure that you as a buyer understand what the appraisal gap pieces mean, understand what it means if the value doesn't come in. And, it's funny because when it gets down to that point, not funny, it's a little bit frustrating, but as a buyer, when you get down to that point where they start to remove those contingencies and you got your money's on the skins in the game, all of a sudden it changes your perspective a little bit. And you're like, wow, okay, I don't know what I'm going to do there. Do I really want to spend that extra 20 or 30,000? And the reality is that you should know that ahead of time. And it also, it puts you in a position where it adds stress to you, adds stress to the, everybody involved, sellers and all that. And I think that you have to think about that. And reality is that as competitive as it is, you get a lot of people promising the world, I'll do this, I'll pay this, I'll pay that. When you start to look at the dollars and cents, suddenly that's a smack in the face. And I think that goes down to also circling back with your team and knowing exactly what that breaks down to in terms of money.
Well, and Zach, here's the funny thing about appraisals. And we talk about this a lot, right? And we'll have them come in and they'll be undervalued. And people are like, well, I don't want to overpay for the house. Well, ultimately, a house is worth what a buyer is willing to pay, right? The issue comes into, I could sell the same house 10 times, 10 different prices, and get 10 different appraisal values. It is one person's opinion. Now, you have some agents that really support, the valuation with, hey, Mr. Appraiser, we had 17 offers. They were all at X, and you have some that don't. And you have some appraisers that are looking for comps that don't exist because there hasn't been one sold in the last 6 months. So understanding what the appraisal is and what that means to the property and where you think the property is going to go in the next 6 months to 2 years is more important necessarily. But it's up to your financial situation, which is why it's so important to consult with your team when you're in these predicaments.
Yeah, and actually, I'll use a prime example, current example. Somebody signing on Monday for us is a VA buyer. They were putting 100% financing. They had some cash. They were considering a down payment. I think they're putting a little down at this point in time. When they went on the offer, they went 100 over asking, and we were expecting to, but they've been shopping since November because unfortunately, some realtors or listing agents are a little wary of the VA buyer, even though this guy's A paper across the board. Just a perfect buyer. They put the language in the contract was a $30,000 appraisal gap contingency. That was what they were willing to pay. We came in with, after everything was said and done, appraisal came back with $4,000 in equity. They came in $4,000 over that $100,000 over the asking price. As we were waiting on the appraisal, everybody was kind of, we had a really good team. I think the sellers were awesome. It's a veteran seller who wanted to sell to another veteran. So there's a lot of great things working in their favor, but everyone was kind of waiting with bated breath. And when it came back, and we were all just like, all right, great. But I was talking to the partner on the buyer's agent. She's like, well, I see some comps. There are comps there. And it's exactly what you said. The market dictated. That, and now in that neighborhood, that 100,000 over asking price is now. That's the floor, exactly, and that'll be there to support further. And it's in Santee, which is another area that's just up and coming and blowing up over there. I see it happening in different areas too. Like I think the next one in San Diego is going to be Spring Valley. Is going to be the next one that kind of starts to really see the boats get floated, if you will, the rising tides, old statement. But yeah, that happens. But bottom line, know what you're able to do, know where you're comfortable being, but put yourself in that position, because there's a lot of people that don't know, or maybe think they can, or think they're ready to spend that 30,000 extra. But when they start to look at that actual, whether it's the appraisal, whether they really start to look at the numbers, maybe their loan officer didn't lock because they're not the most intelligent person right now. Sorry, I didn't say that out loud.
Things happen.
That's it. Well, I'll tell you what, I see you sitting in your car. I know you just left the meeting. I know you probably want to go get settled in and actually get dried off a little bit. So thank you so much for your time. We'll talk next week, and you have a great weekend, okay?
Bye.
Happy Friday, everybody.